Welcome back. Elon Musk's $44 billion deal for Twitter is in serious jeopardy. According to a new report by the Washington Post, the report cites anonymous sources that say Musk's team is still doubting the reliability of data surrounding fake accounts on Twitter. And joining us now to discuss is Wedbush Securities analyst Dan Ives. Dan, always great to see you here, as I've been saying on a Jobs Friday. But we got to talk Twitter here. And you're saying there are three paths ahead for Twitter and Musk. Could you outline them for us, please?
Yeah, so I think that there's one, the deal happens at 54-20. I think there's a better chance of me playing for the Yankees than that happening. So let's call that a low single-digit percentage chance, realistically for that. Second, I think if you look at Musk could walk and ultimately try to fight Twitter board in court, we can see the $1 billion breakup fee. And there's a 35% chance that happens. And then ultimately, I think there's a 55 to 60% chance it's a renegotiated price, $42 to $45. That's why we lowered our price target to 43, because I think 54.20 is out the window. I think 43 is probably more realistic, but I think there's a good chance that he tries to walk, fights Twitter board in court, and that's where this just becomes a Game of Thrones in court and really becomes a disaster situation for Twitter.
I just going to follow up on something. You said there's a low percentage chance that you would be drafted and play for the Yankees.
Yeah. So look, but realistically, I think the chances 54-20 happens, and I think you see it in the stock. It's basically at this point zero. I mean, you got to assign some percentage chance.
Yeah.
But that's why right now it's either renegotiated bid or ultimately Musk walks. And I think that's what the stock's telling you. I think this report that we saw last night, I think it's tip of the iceberg to what's going to be a lot of twists and turns coming out over the coming weeks. But again, I do have a decent curveball.
Yeah, well, to be fair, Dan, there's probably a lower chance of me playing for the Yankees, so I'll just admit that. I want to throw a theory out your way that I've been seeing on the Twitterverse here. Elon Musk liquidated $8.5 billion worth of Tesla stock. Could this simply be a ruse for him doing that?
Look, of course, that's going to, and it's been out there in terms of the Twitterverse. Look, I think, as we talked about, the tax sale was an overhang, as we saw late last year. We saw more selling of Tesla stock. And, look, it's been a brutal period for Tesla investors. I think it's a $150 overhang in the stock to Twitter deal. Musk selling of stock has come to an end. But if you look at that combined with the shutdowns that we saw in China with zero COVID, I mean, it has just been a brutal, 6 months for Tesla investors. And I think Musk has started to listen. And I think whether it's a scapegoat or it's a real issue in terms of the fake bot issue, I think he got cold feet. And that's why I think there's a good chance that this deal does not happen, ultimately ends up in court.
Yeah, I have to agree with you right there. And you mentioned Tesla. I want to focus on Tesla for a second. They came out with their deliveries. We've had you talk about that. Just any developments on the China front there? Any new news that you can talk about?
I mean, look, we talked about it on the weekend. Obviously, we talked about it with Brian and Julie. It's everyone knew this was going to be an ugly number because April and May were shut down in China. That's about 70,000 units we think ultimately got wiped out of the quarter. But the reason the stocks rallied is because investors are looking past. They're looking at the month of June. They're looking at second half numbers and into 2023. And I think if you look at the run rate, I think it's been impressive. And I think barring any black swan event in terms of other zero COVID issues, in my opinion, I think Tesla right now is overcorrected. I think we're really going into a period that demand continues to outstrip supply, despite the haters continuing to hate.
Well, and let's continue to talk about supply then, and specifically the competition for Tesla in China. I just read a report the other day that BYD, I'm not sure if I'm pronouncing that right, they are the #1 electric vehicle producer in the world if you count hybrids. And this kind of came out of left field for me. There is a lot of competition in China that I think is underappreciated by the general public. Can you speak to that?
Yeah, I mean, look, it's a fierce competitive market. You see a huge shift in EVs, let's say, versus the US or even Europe. BYD, I mean, you're talking about a formidable competitor, a phenomenal model that they've built, great production. Look at Neo as well.
Yeah.
I mean, Neo is another good Xpeng. I mean, but look, this is not a zero-sum game. I mean, that's really the call here is that Tesla, it's going to be over 40% of deliveries that come out of China. But as you look toward the next year or two, as I think in 2023, get toward 2 million plus in terms of units, China is key. But it's not that they have to just dominate market share, because they're also going to be successful not just in China, but US and Europe. And I think that's an important dynamic now that's playing out. You go back a week ago, if you show those delivery numbers, many of the skeptics be like, Tesla's a stock that's in the sixes. Instead, it's 760 because investors are looking forward on the name.
Yeah, we have to leave it there, but always appreciate you stopping by. Wedbush Securities analyst Dan Ives. Thank you.